Hello and welcome to a new edition of Merrill's Market Madness. Today I am going to be talking about a shift that we are starting to see in this insane seller's market that we have been experiencing for quite a while. We're definitely seeing inventory increase at a pretty significant pace, and I'm excited to dig into the numbers with you. Before I do that, though, I always like to start off, as you know, by looking at our month's supply of inventory numbers. So let me just share my screen with you here real quick and show you what we have going on. So in our MLS right now, we have 5,803 active listings. And then if we narrow to look at how many listings we have pending, there are 11,742, which is a little lower than we've been seeing. So the active listing count is up a little bit. I'm going to dig more into that in a moment. The pending listing count is down. We mostly over the last several months have had pending listings in the 12,000s range. So a little bit lower than we've been seeing for the number of listings that have closed that are pending. And then the number of listings that have closed over the past 30 days is at 9,172. So if you just kind of assume if no new listings were to come on the market, how long would it take for everything to be sold? So at the pace which homes are currently selling, it gives us a month supply of inventory of 0.63. Now, to be in a balanced market, we need the month supply of inventory to be at least a four months supply of inventory, maybe five. And for sure, in order for it to like really start to shift into a buyer's market where values would start to decline, we'd need at least a 6 month supply, if not more. So we still have it's 0.63. It is still very, very, very low. And we still have quite a long ways to go before I would expect home values to suddenly fall or for the market to massively shift. But we are seeing inventory increase, and so that is the first sign, and I'm going to dig more into those numbers here in just a moment. Before I do that, though, if you've been following my show, you know that I like to watch very closely the interest rates. I do think that if interest rates were to suddenly, increase at a rapid pace, that could cause, the pace at which homes are selling and the pace at which homes are appreciating to decrease. And as you can see from this chart here, this blue line is 30-year fixed rate mortgages and what they have been priced at over the past year. And so right now we're at a 2.98% on average, which is a pretty typical interest rate for what we've been seeing. As you can see, it's been floating very close to 3% here for the last couple of months. The highest that it spiked up to was 3.18% on April 1st. The lowest it will ever hit was a 2.79% on January 14th. But again, just even if you just look at a 3-year trend, we're still among the lowest that we've seen over the past 3 years. Same thing, 5 years. I mean, even back in, when rates got really, really low there, they never got as low as they are now at 3%. And then, if you back it all the way out to, forever, the rates are just still continuing to be at all-time lows, and that will continue to help affordability. And, I think more buyers and investors are interested in purchasing right now while money is so cheap, especially if you believe, like I do, that inflation will probably exceed 3%. And so it's almost, it's not free money because of the way that mortgages are amortized, but it still is a very affordable money. So let me stop my screen share here, and then now I'm going to jump into the inventory because that's the big change. We really have not seen a big drop in demand. The same number of homes are selling as we've been seeing over the last several months. In April, the month of April, our MLS saw 10,206 home sales. In May, 9,671. And in June, we saw 10,216. So the number of homes that are selling is remaining very constant at near that 10,000 homes a month. That might fall as we head when we get the July and August numbers, and I do believe it will fall slightly. You know, as I mentioned, we're seeing the total number of pending listings is down slightly, but I don't expect a significant drop off. Maybe 10%. We'll see, you know, 9,000 homes closing instead of 10,000 in the months of July and August. So, you know, that's just historically a pretty normal cycle. May and June are typically the biggest months for home closings, and then by July and August, you know, it's, I don't know what, you know, everyone, it's too hot or school has already started or whatever the reasons are. We start to see the total number of listings selling, the home selling goes down a little bit. But the very interesting number is the active listings. So on June 1st of this year, we had 4,821 active listings. And on July 1st, we had 5,708. So that means that in the month of July, throughout the month of June, we gained 887 active listings, which is an 18% increase. I mean, that is a very, very significant amount of listings to gain in just 1 month. So I do, you know, if that trend continues, right, if we continue to gain 887 active listings every single month, then within 4 or 5 months, we'll be up to 10,000, you know, 10,000 active listings. And that'll still be a seller's market, right? But if that continues for a year, or if demand starts to fall, and then that also continues for a year or two, then we could start to see a more balanced market. We're still very far from that. Inventory is still so dramatically low that it's still very much a seller's market, and we're still expecting home values to continue to increase, but probably not quite at the frenzied pace that we've been seeing. So these final numbers I'm about to share with you blew my mind. Okay, so in June 2020, the average price of all the properties that sold in our MLS was $369,288. In June of 2021, the average price was $507,573, meaning that if you had bought an average home in June of 2020 for that $369,000, you gained $138,285 in equity in just 1 year. That breaks out to be $11,523 a month. It is a 37% year over year increase in the average sales price. And so I think that what we'll probably likely see over the next 12 months, again, no crystal ball, World War III could break out tomorrow and change everything. But based on the fact that we're seeing supply increase right now, and the fact that affordability is becoming a factor, as long as rates continue to stay low, I think we'll continue to see home prices go up, but I definitely don't think we're going to see an increase of 37% over the next year. I think more likely we'll probably see something around 10 to 15%. So I still believe it's a great time to buy, though. Again, I don't think we're in a bubble where home values are suddenly going to come crashing down. But inventory is increasing, and that's good news for buyers. Hopefully, make it a little bit less competitive. Although I don't know, we took a listing last week, got 15 offers, and sold significantly above list price. What we're continuing to see is that, you know, the beautiful, totally fixed up, move-in ready, remodeled type homes that are priced fairly accurately are still bloodbaths. It's the homes that need a little bit of work, the homes that need some updating or need some paint and carpet. Those ones are struggling a little bit, and we're finally starting to see some homes sit on the market. Interestingly, though, the homes that sold in June of this year at that average price of $507,000 sold for an average of 3% above the asking price. And that's pretty significant when you consider we're looking at a sample size of 10,200 homes that sold in the month of June. 10,216 homes sold in the month of June. And still, even with that big of a sample size, we're still seeing homes sell for an average price of 3% above the list price. So just to make the math on that easy for those of you who don't think good in math and percentages, if you have an average $500,000 house, or you listed it at an average of $500,000, you're selling it for an average of $515,000 right now. So pretty neat. Some fascinating things going on in the market right now. Again, still a seller's market. It will continue to be a seller's market for quite a long time, but inventory is increasing. So let's keep an eye on that. I'll continue to keep you posted as things progress, and we'll go from there. Thank you all for watching, and have a great day.